Welcome to the Transparent FX Academy. I'm Nick and I'm a top author in trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a quite significant monthly demand and support area. In fact, from here, all this previous rejection to the upside was created, confirming this zone as strong demand and support. And at the moment, we can see how the market is currently testing this exact same level. It is rejecting it to the upside. And from here, we could expect more potential bullish continuation. Now, in testing this support zone, we had also identified in our previous analysis the fact that the market had created this M pattern. And in general, after the creation of an M pattern, what you would expect is for the market to create a move higher for the completion of the pattern at the neckline, which is the previous support turned resistance. And in fact, we can see how that previous resistance has now been tested and also broken to the upside. So this M pattern is completed, and also the structure of this M pattern has been broken because the neckline is an area of previous support, which after it gets broken to the downside becomes the upside target for the completion of the pattern. But if the market breaks above it, at that point, that previous support that is supposed to be turned resistance here becomes once again support. So what we could expect in a situation like this is for the market to go and test that previous resistance turned support and then to reject it to the upside. Now, if we drop down on the weekly time frame, it is even more clear how the market has broken weekly structure to the upside. In fact, this area was acting as previous weekly resistance here and here. The market then broke above it, and at that point, all that previous resistance was turned support at this level. And we can also notice how after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a 0.32 Fibonacci retracement lining up precisely with this previous resistance turn support, creating confluence of support at this level that we could in fact expect this market to test and then to reject to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for gold, what we can see is that with the last reports, net positions have once again started increasing. We went from having 71.4k net positions up to 112k net positions, with 11,000 longs added with the last report and 30,000 shorts getting closed. Now, this shows how a massive amount of longs are getting added on the institutional side of the market for gold, and shorts are getting closed. Therefore, this means that institutions are expecting an increase of the price, and there is definitely the possibility to see more institutional longing if the market will go and retrace to this confluence of support area. Therefore, if we will see a move to the area, there is definitely a possibility inside of here to see more institutional longing, which at that point in turn would further increase the probabilities of a potential move higher away from this level. Now, dropping down on the daily time frame, what do we have? Now, here on the daily, before we continue with analysis, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we expected this move lower. Then I explained all the reasons why after the creation of this red candle, we could expect a retest, then we had the impulse. I made another breakdown explaining all the reasons for which we could expect first this correction and then this continuation higher, which again is exactly what the market gave us. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. However, at the moment, now that the market has created this massive impulse to the upside, we have to identify the new structure from a daily perspective, which, as we can see, is exactly the same as the structure that we have already identified on the weekly time frame. In fact, here on the daily, we have previous daily resistance here, again here, and again here, which now the market has broken to the upside. So all this previous resistance from which all these moves to the downside were created is now turned support at this level. And we can also notice how, generally speaking, if we have an impulse and we want to measure the correction, if we look at the pattern, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the nearest area of confluence of support is essentially this one here. So the area in between the 50% and 0.618 Fibonacci's, which is also lining up with this previous resistance turned support here. So inside of here, we have confluence of support, which we definitely have the possibility of this market to test. And if the market tests it, inside of here, there is very good probability of seeing more institutional longing since institutions are already closing shorts and opening longs. So inside of a confluence of support area, if they will add more longs and close more shorts, that will further increase the probabilities of a potential move higher away from this area. So if the market will retrace to this zone, how we could be approaching a potential rejection higher away from this level. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. If you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount for the upfront price of the program, which is from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment there is still a bit of time to join before the offer expires and everything goes back to normal. So I really suggest that you go and check it out as soon as possible. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out as soon as possible. The link is also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.